Start recording. Permissions. ICT all-in-one. Good morning, day trader. So really interesting to see that the CPI news report was today, but I was not able to find it inside Forex Factory or, I don't know, trading news. What other trading news today? Something else is coming up. I mean, yeah, news came out. That was updated a couple of minutes ago, or well, at 8:30 a.m. But Forex Factory didn't show that. Daily FS, let's check that out if they... Economic calendar. No, can't see it here either. Well, anyway, it is what it is. I'm glad I was able to catch the move. I mean, once I saw, I also shared that right here on Discord. Where are we at? Tape reading up here. So once we close back above the bearish fair value gap, which we used to catch this short right here. So this was the first bearish fair value gap after we saw the pump above the previous day's high. It was a rather risky play to take during the London session, but we saw 1, 2, 3 pushes to the upside, which gave me a little bit of confidence. I took partials at the short-term low. The rest has been stopped out at break even. And yeah, then seeing it close above the bearish fair value gap, which we used as resistance to deliver into short-term low sell side liquidity, leaving behind equal highs and a bullish fair value gap right here, led me to take my first entry. And then scrolling down a little bit, I added another buy inside the 15-minute bullish fair value gap, being in with 3 contracts. And then yeah, the news candle came in. Apparently CPI news. I'm not really sure about that. Didn't see that inside Forex Factory, but according to Kuch, yeah, BLS released CPI data and cannot find it scheduled on any economic calendar. He has jumped on the news of lower inflation data. As a quick update what happened at 8:30, because yeah, really didn't expect that. And just like we anticipated, we looked at this bullish fair value gap right here. Once we closed below it, right here, we said, yeah, very likely we're going to hunt all these stops and take out the current low of the day sell side liquidity right here. So the entry could have looked something like this. We go short right here on the confirmation close, place our stop above, target that sell side, should be hit by the New York Open or with the New York Open. We see NQ doing something similar. Nope, NQ is actually lagging behind. As we can see, traders likely trapped long the entire day, all Asia and London session traders. 8:30 news, maybe some more people jumped in right up here. Well, they're certainly paying for those shorts right now. Someone has to lose for someone else to make profit. We're opening up with a volume imbalance right here, right on our previous day's high level. We cleared the all-time high, so if we go over to the daily time frame, all-time high is history now. Let me actually get rid of all that. Group 2, yearly overview, trend line, Wednesday. Let's do the daily analysis. all-time high at 5029.25 has been achieved. We had 4 standard deviations of our final manipulation to the downside right here. Lower low, higher high, so this was a fake market structure shift. Push lower one more time, form a lower low, lower high, lower low, measuring from that lowest high to our lowest low, projecting 4 standard deviations, almost perfectly lining up with our all-time high right here, which has been achieved now. And like we said it or mentioned it in the weekly outlook, we looked for a reaction of this daily order block right here. So we opened up on Monday. This was Friday. We bounced off it already. On Monday we retested it. This order block, those 2 down closing candles on the daily time frame, rejecting. Tuesday was unfortunate. Wednesday expanded at least. Then Thursday also unfortunate. Look at this tiny little range, but now on Friday we eventually managed to take out the all-time high, and if we look on the daily time frame here, we can see a daily bullish fair value gap, so we can mark that out. Keep an eye on it. We might be retracing into that right now. This would be a inversion fair value gap on the daily. Let's stretch that out too. But this is almost too old. I like to work with fresh fair value gaps. They tend to work a little bit better. So Monday, let's bring that over till here. Fair value gap. And put it into the daily analysis folder. Drop it down to the 5-minute time frame. So this is our daily bullish fair value gap right here we just talked about. And we have perfect sell side on the entire move to the downside. We have plenty of equal lows. That's gonna be market close this week. Right here. Low of day sell side. Previous day's low, and all these higher lows that we have put in place yesterday during this dev job. Really wasn't lots of fun. Alright, previous day's high taken. Sorry. We have low of day sell side liquidity. We have a bunch of other equal lows right here. We have our inversion fair value gap after we cleared the all-time high. News pump and dump. Triggering stops or long positions, I'd guess, above the all-time high. Let me drag that out, all-time high. And give it a new line so it's visible on the 5-minute time frame. There we go. Let this stand out, make it green, make it a little bit bigger. All-time high hit. And we're starting to see that we already started to support bearish order flow right here, bearish fair value gap, and then we end up closing below our bullish fair value gap. This could have been a quick run, a quick trade. Place a stop right up here, target obvious sell side, and by obvious sell side I mean each and every one of these short-term lows that we left behind on our move up to the all-time high. Right here, another short-term low, and of course our data low, 8:30 news low. So all that has been cleared. Don't need to have 100 lines on our chart, but we understand what happened. So let's see if we continue to respect bearish order flow. I mean, look at all the volume imbalances we left behind, 1, 2, and then the third one, but we closed that one in. Bearish fair value gap, maybe gonna retest the VWAP. Is it New York? Oh, it's already New York open, that's why. 9:35. Let me pull up the Discord and see if we have any questions. Nope, we do not. Is everything running smoothly? No issues or anything? Hope not. We have a tiny little bearish right here. In terms of breaker block, well, lowest down closing candle. Yeah, no, that's just messy. Maybe on a 15-minute time frame. Yeah, we could be referencing this down closing candle as our breaker block. Higher high, higher low, higher high. Market structure shift. Breaker block, bearish fair value gap, VWAP. NQ is also dropping now without doing that retest. Didn't hit the breaker block or the fair value gap just yet. Bearish fair value gap. We already hit this low on ES. On NQ we hit it as well without giving that retracement. Similar entry. We close below our highest bullish fair value gap right here on this candle, offering a better risk to reward. Then we have sell side liquidity. Already cleared this low. Similar to all these other setups, we take buy side right here with that news pump. Close below our highest bullish fair value gap, turning it into a inversion fair value gap right here on this candle, and then we can simply target lower prices below all these short-term lows. Same setup. Curious to see if we're gonna retest the breaker block. That would be nice for the continuation lower. Don't have to, but a 15-minute time frame swept the low. I would assume that the high of the day has been put in place. It didn't hit the 15-minute breaker. Can check for a 1-minute time frame breaker block. Yeah, no, also didn't hit that one. I would be looking for the lowest down closing candle here. I got close to it, filled in this 1-minute bearish. But if we look at the 1-minute time frame and take a close look at it, push to the upside, then we failed to hold the bullish fair value gaps, continued lower, 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 but my eyes are really focused on unfilled volume imbalances right here. 99% confident that we're gonna retest the 50% of this order block, fill the unfilled volume imbalance. These would be a nice to have or a nice to see. Right now we're holding support on that previous day's high. Take a quick look at NQ. NQ is accelerating lower with the New York Open. Right here we have that Asia sell side liquidity and 1:30 AM sell side liquidity. Would have been a similar entry. I took this one this morning, the short. I took the same short on ES. We talked about that inside the tape reading chat. Bearish fair value gap on NQ. We actually didn't see that bearish fair value gap. We just closed below the highest bullish fair value gap. Then I tried it again, but only on paper right here. We took buy side, closed below the highest bullish fair value gap. Boom. Target short-term lows and a simple 2-to-1 risk to reward. And this would have been the same setup. So right here, we close below, place my stop at the high. 2-to-1 hit. Very simple, very quickly, very efficiently. Now, come on. Stupid paint. Here's our daily bullish fair value gap, which would be a nice target with all these higher lows right in here. In terms of risk management, well, I would place a position at this order block. and do something like this. Order block, bearish fair value gap, maybe scale in with micros into this trade. I would make sure to place my stop loss above the inversion fair value gap. We never know. My safety stop loss doesn't mean we wait for our safety stop loss to be hit before we get out of the trade or before we scale out of the trade. If you want to narrow, if you want to tighten up your stop loss, place it above the short-term high. But yeah, I would be looking forward to see an entry on this breaker right here. Doesn't mean it has to work out. Let's see what NQ is up to. 15-minute time frame. This would be our breaker on NQ, the set of down closing candles. And if we go over to the weekly time frame, I think this could be considered our thank God it's Friday wick right up here, because yeah, we had a pretty bullish week, went above the all-time high of November 2021. On NQ we already did that long time ago, sorry guys. Let's head over to MT5 and log into the 100K account. I get my entry here, place my stop loss above the inversion fair value gap as safety stop loss. Let's zoom out a little bit here. Where would our take profit target be for a 2-to-1? That's a little far. Check out trading view. Let's wait until we trigger that. Oh well. Fuck it. Heavy getting in right around here. It's close enough. I'm not too precise with my funding pips account. Fair value gap or not, my stop loss is right here. If we start to invalidate that, I get out of the position. My take profit target for a 2-to-1 would be all the way down here. Wouldn't say it's unrealistic. We'll see. We take it one step at a time. Let's log into the paper trading account right here and place our limit orders. One limit order right here, one limit order on the fair value gap itself, and one at the 50%. Practicing for the Leap trading view competition right here, where you also get a 250K account starting in March. You'll see how that one goes. Can win up to 10K by simply paper trading. NQ is also pushing to the upside now. Let's see if our first stop is getting entry is getting triggered. We buy one right here to get out. Then we buy another one up here. And another one up here above the inversion fair value gap. Targets, low of day sell side. Daily fair value gap. I'd say I get the majority of at the low of the day. We tap the fair value gap, not the breaker block though, at least the 15-minute break if we take a close look at it, but we also left behind a 15-minute bearish. If we look at the 15-minute, we have a unfilled volume imbalance up here. A little bit worrisome, but it's not visible on the 1 hour time frame. We just cleared the all-time high, so I think we could be good for a little retracement. Of course, I could be wrong, and we end up whipsawing here, taking stops to the upside, taking stops to the downside, and then continuing, yeah, further up, but we'll see. I think it's a pretty decent setup to take. Is anyone joining me on that setup? Oops. Nice. Let's see how it goes then. I mean, it would be tough to call this or use standard deviations on this move because it's, yeah, an 830 fake pump to the upside. We already talked about the potential inversion fair value gap setup here to our 2-to-1. Being aware that we're scalping and not swing trading. Starting to push back up. Let's check out where our regular trading hours opening gap comes in. And mark out our 830 open. That's why I love the ICT all-in-one. All I have to do is open the indicator, click a few buttons, and I have all the things I need on my chart. So this is our regular trading hours opening gap. We already filled in, I'd say, 90% of it with the wick right here on the New York Open candle. Regular trading gap. So if we were to check out the regular trading hours, filled in the gap. And yeah, regular trading hours, we didn't take the all-time high yet. Could be interesting. Like I said, we risk takers. Just have to make sure we take calculated risks. If I would see an immediate close above this bearish fair value gap, I would simply get out at half the loss. So unless we get a huge whipsaw here with the 830 news and then, yeah, a continuation or completion of that whipsaw price action right on the New York Open, well, then we're simply wrong. But that's okay. Check out NQ. NQ is pushing up strong inside that 15-minute breaker block now. Inversion fair value gap and bearish fair value gaps. Keeping an eye on it. Oh, it's not fair, and I think you really mean. What did I want to do? I wanted to grab my AirPods. Start listening to some music. Oops. Oops, what? What's oops, Simon? Ah, I know what you mean, likely. Still looking at this unfilled volume imbalance. I could imagine that we go back to it. But also, prior to the New York Open, we had, yeah, big movements. Usually that's not the best sign for very clean price action at the New York Open. Yeah. But at least or at least a trader is, I don't know, acting right when he's making an accident. I know lots of traders, also talking about myself here a little. When I used to fat finger and accidentally went long while I initially wanted to go short. I used to hold the trade and see, oh, maybe I can get out with some profit. I think we've all done that once. Like, okay, I'm not gonna get out in a loss. Let's see if we can go along here. Tonight. NQ hit the breaker block, just like outlined. Bearish fair value gap right here, paired with the VWAP. Yes, it's also heading lower without having tested the breaker block though. But we already made sure to get an entry, relatively low. And we also know that we have a 15-minute bearish fair value gap here, right here. That could potentially be used to sweep the lows right here. Gonna take a partial on my funding pips account if we hit this and leave something running into the previous day's low. But if we measure, well, like I said, it's still super tough to measure the last manipulation move to the upside. I mean, we can, but I think then bodies would almost be the better choice. Standard deviations ICT and see where that would take us. 4 standard deviations would almost perfectly bring us down to the new week opening gap if we turn on the new week opening gap right here. It's sitting right here at 4970. Just wait a second for it to load up. Right here, new week opening gap and midweek low, Wednesday's low. As potential targets. We're looking nice. If we form a new lower low here, I'm getting rid of my sell limits. Because then I'm not really interested in price coming back up, retesting it. If we hit that one, well, I think we can call it a week. Who ended up making some profit yesterday on ES? Or maybe you took the NQ setup. Yesterday was really nerve-wracking in my eyes. ES, choppy, worst price action I've seen in a long time after the New York Open. And on NQ, perfect delivery. I mean, we outlined it all during our stream and just unfortunate. And by 10:50 or before the macro even started, we hit the previous day's high. Of course, we also had our wicks to the downside, but it's acceptable. At least we moved into one direction. I mean, we cannot say the same thing about ES. Yes, we went up, but overall we didn't went up. 10:50, that's where we ended up. Not even able to take out the London high. Yeah, I agree. And Q keeps on pushing here. Back into the inversion fair value gap. Let's see what ES is up to. 1 minute time frame. 9:54. Let's see what happens at 10 a.m. Maybe we can get some more filled in here. Up. Volume imbalance. NQ at the 50% of the inversion fair value gap. Huh? Looks like NQ might be leading here. Seeing ES chopping at the low usually tends to be a indication of price not actually interested in continuing lower. Based on screen time and experience. Accumulating longs down here at a discount of the daily range, but we'll see. Swept equal lows, push back up. And like I said, still interested to see what's happening at the 50% of this breaker block here, because we have a unfilled volume imbalance. And if we go to the 15, we even have a unfilled volume imbalance up here. But by the time we go up here, I think, based on the volatility, we should be able to get out with a small portion of our position. For example, if we invalidate the 5-minute fair value gap, my stop is right up here on the funding pips account. But NQ seems to be pushing. NES is chopping, like so often. But right now, I don't mind that ES is going sideways here. Actually prefer that. And we could argue that, well, maybe the objective of this 2022 model has already been achieved. Because like I said, we hit short-term lows and we cleared that. And now after we have cleared that with the swing to the downside here, we really don't have more interest to continue lower into Asia sell-side liquidity pool and instead turn it around. And that's most of the time when the 2022 setups fail here, really. If part of the job has already been finished before we even get the retracement entry. That's why the inversion fair value gap entries to chase the continuation to that sell side is most of the time the better choice. We hit the breaker block. NQ is not looking good. We hit the 50% volume imbalance here. So that's filled in. This would almost be a new structure shift here on NQ. Closing back above the inversion fair value gap, definitely not a good sign. Now we're in with all 3 contracts. Let's see how we close. Okay, we didn't close above, but volatility starts to kick in. It's 10 a.m. now. Yeah, NQ is looking extremely bullish. Let's see if ES is going to follow. We closed above the 15-minute bearish, but we opened up with a volume imbalance back below it. You see that? And we hit the inversion fair value gap here on the 15. Still gonna give it a chance. to hold the breaker. Round and round and round with me. Could have gotten a better entry, but I'm happy. So based on NQ is telling a little bit of a different story. We pushed back above the inversion fair value gap. Whoa. Pushed back above the initial bullish fair value gap after hunting sell side liquidity right here. Closing back above it and now potentially retesting it to continue to push into buy side. That's the story on NQ right now. Not sure if it's just a fake out. On ES we don't see the same momentum just yet. We'll see, maybe that might change. 935, 930, 950, 935 right here. Now let's see. If we retest that, hold support on the VWAP and close above the bearish fair value gap, I'm going to be out of my trade. Not waiting for short-term highs to be hit. Like I said, NQ is telling a completely different story. Coming from a discount, pushing back above the inversion fair value gap, shifting structure to the upside, retesting that. If we're holding support here, could really use this as the continuation up higher. If it doesn't, well then it's just really, yeah, not the cleanest delivery on NQ. 45 seconds to go on this candle. Retraced all the way into this, yeah, we could call it a inversion fair value gap. But what I mean with having retraced into a discount is if we look at the entire daily range, below the 50%, we're still below the 50% actually. Hit the optimum trade entry, took sell side liquidity. Let's see. Open with a bullish volume imbalance here, closing out as a wick. Let's see, now we have a bullish fair value gap paired with the inversion fair value gap here on NQ. Gonna keep a closer look on NQ now. Actually seeing if we're reading this right, or if NQ is playing with us. Taking a little paper trade here. Stop loss here, take profit target at buy side. Let's see. Take a look at DXY here for a second. Because we had inflation data today. 8:30, but right now we're inside, yeah, we're trapped. We're not really sure. It looks like it wants to continue lower, but it could also, yeah, I don't know. Let's see what the daily time frame tells us. Clearly in bullish order flow, respecting bullish fair value gaps. Unfilled gap right here, unfilled gap up here. Bullish fair value gap right here, took buy side liquidity here, took the short term high right here inside this big bearish fair value gap. Interesting. Let's see what Euro US dollar is up to. 5-minute time frame. Very interesting. Yes, we've added a buy here on NQ. Just seeing if we are reading this right. Closing back above the inversion fair value gap at 8:30, leaving behind a bullish fair value gap. Added the long right on this bullish fair value gap. Target at buy side, stop loss at the previous day's high. This would likely mean that we're gonna get stopped out on ES. But ES is not showing, yeah, that same confirmation yet, and because I'm trading ES here, well, could be sort of a six sister scenario here. I'm gonna be waiting. If I see the close above this bearish fair value gap, could also mark out this volume imbalance here. Gonna get out, saving myself some risk. My stop loss right up here. No. 25 seconds to go. We ended up holding the breaker block, but open with another bullish volume imbalance, but still playing inside of that, so I'm not gonna get out. Let's check out NQ. NQ with a bullish engulfing candle coming out of the, yeah, breaker block right here, or unicorn setup right here. Highest up closing candle. We look forward to see support on that. Paired with the inversion fair value gap, paired with the bullish fair value gap being left behind. Nice overlapping confluence. But we don't see that yet on ES at all. That's why I'm still holding on to the short. Of course, if you don't feel really confident in this holding and potentially continuing lower, then take off some risk. I mean, the A+ setup, in that scenario, we wouldn't have seen something like this on NQ. We would have just simply continued lower after retesting the VWAP. Should be something that's not going as anticipated. And based on that, yeah, I think it's always a healthy option to cut some risk. Take 50% off if you like that. If not, then just leave it running until it's invalidated. Get a new 15-minute candle in 3 minutes. Like I said, we're still holding the 15-minute bearish right here. We just don't want to see a candle close again above this high. Ideally. Inversion fair value gap on the 15 right after taking buy side. Retesting that. On a big giant plan. If NQ fails here, then yeah, just ends up. Because NQ has a much easier time to move from experience, it also has a much easier time to fake you out, I'd say. Because right now this is a bullish as hell setup. If it fails, then I don't know, just not ideal conditions. Right now we're playing around the VWAP still. Come on, mate. Mm-mm. 10:10, 10:15, new 15-minute candle. Already opened a new hourly candle, having retested lowest fair value gap. Doesn't look super bearish in my eyes. We could just continue to go higher, but also could end up getting faked out. Right now it looks like we're closing above the 15-minute bearish. Right here. I would like to avoid that. It's not like I have anything to say in that. $40 seconds to go. Just because I'm long on NQ card, doesn't mean that I would suggest going long too. Just on a paper trade here to see and get a feeling for NQ if I'm going to trade it next week. Seeing how good my read works on NQ. Yesterday it worked pretty well. And today so far too, with the inversion fair value gap setups. Only took this one short because it's in the timing window. And I was still caught up in the long on the S into the all-time high. So we still managed to respect the 15-minute bearish fair value gap right here. Interesting, let's see. But once again, open with a gap to the upside. Too much wicking. And Q going sideways now here on the breaker block. Two to one risk reward up here. NQ taking out the first high. Throw my stop loss to the short-term low. NQ keeps up going. But I don't see any kind of confirmation on ES yet. I would wait at least for a close above this bearish fair value gap. Otherwise, it would just be a pure, okay, NQ is going higher. Let's try and see if ES can go higher too. And it's not really the type of trades I like to take. I like to take those, but I want to see some confluence paired with that. Right now, all I see is we're inside the breaker block, inside bearish fair value gaps. I want to see at least that lowest bearish fair value gap being invalidated before I switch the bias. Or both, and then eventually maybe even try to flip long. 15-minute, we hit the unfilled volume imbalance now. Let's wait for this candle to close. Be patient. Setup seemed to be working out here on NQ. For next week, I'm going to grab myself a new Funding Pips account where I'm going to be trading NQ only. And then I'm going to pause the S&P 500 accounts for a while, for 1 or 2 weeks, and see how that works out. Because what we would have done right here is simply switch over to NDX and said, come on. MT5 is a real pleasure to work with. Place a buy limit on this fair value gap. Place our stop loss right here on this short-term low. Our 2-to-1 risk reward take profit target would have been right here. We would have been triggered into the market. We have a spread of currently, yeah, that's perfect, 10 points. Even smaller than during London. NQ having closed above this high, definitely would trail up my stop to this next short-term low. Yes, nicely rejected here actually. Still playing around. I mean, yeah. Well, I say I'm glad. If you wanted to increase your risk to reward ratio on this breaker block, bullish fair value gap inversion, fair value gap setup, of course you could have moved your stop to the low of the candle that left behind the fair value gap, but I prefer being a little bit more careful with my stop, giving it some more room to breathe. I'm well aware that it lowers my risk to reward ratio, but I'm still able to achieve a 1 to 1.5 by that without really risking to get stop hunted with a wick. And I think especially for beginners, it's a better way to do instead of trying to be super precise and placing your stops way too tight and then, yeah, having a bad experience because you get stopped out a lot and you're like, setup might not be working. Just give it a little bit of room to breathe. There's nothing wrong about that. and 20. Next candle is going to be a new 15-minute candle. Could end up with SMT divergence at the high somehow. Let's see if NQ can hit the target. Of course, you can be looking for targets above that, but I would make sure to secure partials at low-hanging fruit targets. You never know. Make sure to trade your stop, especially if you're trading on Apex accounts with live trailing drawdown. Don't want to end up in $615 or $620 in profit and then let it hit your break-even level, because then that $630 in profit is going to be deducted from your margin. Because let's say you trade on a 100K account, you're up $1,000 at this point, and it comes back without hitting your take profit target to break even, and you get stopped at break even. You actually lost $1,000 off your margin, because your highest account balance used to be $101,000, for example. So you have to be careful with that. And on those 100K accounts, you only have 3% margin to play with. So it's most of the time the safest choice, best choice to make is secure profits when profits are available. Because if it comes back and you lose, let's say you're up $1,000 or $2,000 and you lose that, well, then you only have 50 or 75% of your entire margin left, even though you theoretically didn't lose a trade. Yeah, I agree, that sucks. That's one of the reasons why I paused my Apex funded accounts. I blew 2 of them. Because of that, I was in a epic ES long, had my take profit target just at buy side liquidity, missed it by 2 or 3 points, came all the way back to my break even, and of my $2,500 initial margin on my 50K accounts, I only was left with 500 or something. Really nice trade, would have been a great win, but yeah, because it came back to break even, those nearly $2,000 or $1,500 in profit actually counted as drawdown. And then only having $500 available. Apex is the only future funding firm that does that during the challenge phase. Take Profit Trader does it too, but only once you're funded. And the difference is that with Take Profit Trader, when you're funded, you can request payouts immediately. So let's say you trade your 100K account, you make $1,000, you cash that out. And then, to compensate that. With Apex, you have to wait for the payout window, and to qualify for a payout, you actually have to maintain a 30% consistency rule. So I wouldn't, talking from experience, it's not as much of an issue on the Take Profit Trader accounts, because once I'm making profit there, I'm withdrawing it anyway, so I'm already losing that portion of my trading drawdown. I'm just doing, smaller trades there, 1-to-1, 2-to-1 risk to reward, and you can basically cash that out daily. That's the cool benefit there. With Apex, you have to need 10 minimum trading days between withdrawals. A 30% consistency rule means if you make $1,000 on day 1 and you want to cash out those $1,000, well, with the 30% consistency rule, that means that if you want to get that payout, you cannot just do 9 days of micro executions and do $1 in profit, $5, $10 in profit, because then of your total payout amount, the $1,000 in profit ends up making up like 99% of your entire payout, and that's not how it works. So you would have to make 300, 300, 300, 300, 300, and then cash those out. in order to maintain that 50% consistency rule. And then it's tough, requires a lot of consistency and discipline. That's why I think Apex is one of the hardest firms to actually get paid out with. If you have a PA and you met the target profit, can you use that as buffer on TPT or Apex? Yes, you can use that as buffer, because once you met that target on your funded PA account, your trailing drawdown, your live trailing drawdown actually stops and it gets locked in at 50K. So if you're then sitting at $52,000 or $53,000, your drawdown, the maximum amount you can lose, is locked in at 53K, at 50K. If your balance goes below that, yeah, you simply have blown the account. That's that safety pillow method. And everything above that can easily be paid out without losing anything of your trading drawdown, because that is now static at 50K. And that, yeah, target is always measured from how much initial drawdown you have on your account. So let's say 50K account, $2,500. So once you're funded, you have to make those $2,500 in profit. And once you're above that, your trailing drawdown is locked in at 50K. So if you then go up to 54K, it doesn't move up to 51K. It stays locked in at 50K. Oh shit, I closed in queue. Yeah, well, I guess that template is lost to history. Create new chart. NQ. No, there we go. NQ about to our profit target. Yeah, still holding here. Yeah, well, not the best sign in my eyes. A failure to continue lower. It's already a success for bulls here, for buyers. Let's see how we close here on the 5 minute. In that case, I would start to take off some risk. If we start to close above the first bearish fair value gap here, after holding it for 30 minutes almost. Out with 50%. Not with the entire position, of course, but now this theoretically could be viewed as a inversion fair value gap. Take profit target on NQ has been achieved, so now we have SMT divergence. Close above the 15-minute bearish. I don't know, just typically as shitty price action. Well, we caught a very easy long on NQ based on a fair value gap, breakup block, inversion fair value gap done. Let's actually take off some risk here as well. So now we retested the fair value gap, inversion fair value gap. Let's see if we use that to close above the next bearish fair value gap to take out the short-term high then potentially end up holding support here and deliver also into buy side. And NQ is just front running the entire move. They're accumulating longs around the VWAP, below the VWAP and around the VWAP. But if we think about the reason why we entered this trade and what we wanted to see, or what we at least anticipated, I think, yeah, that's not what we anticipated, so I would agree it's fair to get out with 50% of the position. Save a little bit of our equity. If we see it actually being used as support and we also close above this bearish, that would be my full exit before we hit my stop loss. So NQ, once again, delivering much cleaner during the New York session within our timing window. That's going to be my main reason why next week I'm going to be focusing on NQ. I mean, yeah. Fill in the blank. This is price action. Right here, beautiful up closing candle. We closed above that, use it as breaker block. Inversion fair value gap. Bullish fair value gap. And even the 830. Bearish fair value gap, which has been holding nicely to deliver lower. Once we close below it, confirmation, we're gonna attack sell side. Hit 50% of our daily range. Pick some up below 50% and continue to expand. Nice overlapping confluence. Got our entry right here on the fair value gap. A stop loss was placed right here. Let's see if our 2-to-1 would also been hit. Seven, 6, 5, 4, 3, 2, 1. All right. A little bit of a reaction at the end, or last few seconds of the candle. We saw that we looked like we're gonna close above, but we ended up not closing above. Now we have equal highs here. Just gonna let the rest of my stop to be hit, I guess, here. How much is that? 460. Yeah. That's not gonna make a difference. On the CFD chart, we actually already cleared that high. NQ hitting the 2-to-1 risk to reward ratio. We're at the all-time high. Hard for us to look for any other targets to the left. There's nothing. It's blank. We're forming the all-time high right now. As we move higher. Next interesting target, I guess, would be a big figure level. 000 is at 1800. As an institutional level. Clean delivery here on NQ once again. Did anyone play NQ? Katya, you likely did, based on your message. Nice, guys. Well done. Good job. I'm out of the entire ES long here. My stop has been hit on the Funding Pips account. Where are we at? SPX 500. My stop was right up here with spread that has been hit. And yeah, like I said, if we would have entered like we did here on our fair value gap, version fair value gap, placing our stop loss up here would have been not worth the risk at all. I mean, that would have been a full-on swing trade and not a session scalp. What I'm looking forward to take, like for example the NQ long, which would have played nicely and also hit our 2-to-1 risk reward right here. I still have 1% risk available on yesterday, but only if I see a halfway decent setup. It's 10:35 now. SMT divergence at the highs. Let's see how we close here. We have 30 seconds left. Otherwise, I think we might just call it a week. See if we hit the big figure level at 1800. Well, ES could just end up chopping up until it hits that high. I don't know, it's part of it, I guess. That's what I'm going to do over the weekend. I'm going to analyze, compare NQ and ES over the entire week, basically over the entire year. See what kind of setups I prefer taking. If my go with the flow approach, like for example this trade, works out most of the time, or if NQ is just too volatile and would fake me out too often. In the complete opposite would be ES, almost being too slow and therefore faking me out, if you know what I mean. We could still end up continuing lower here and would just be an unfortunate stop out, but yeah, I prefer to be out. I cannot place my stop all the way up here. Risk reward ratio wise, that would make no sense. At all. Because I'm looking for quick entry, quick exit, at buy side liquidity, taking my profits home, done. Get in, get out. I'm not looking forward to, let's place a trade like this on the breaker block fair value gap with our stop loss fixed at the swing high. Knowing that it's Friday, market is going to close, I cannot even hold over the night. Or if I have to pay swap fees on my Funding Pips account, 2-to-1, well, that would require a 40-point drop. Not saying it's impossible, but that's not the session scalp I'm out here to take. Let's see how we close here. Are there any questions regarding today's price action? Because I don't think I'm gonna be streaming until 11 a.m. Might not even be taking any more trades on ES, like always, or like the entire week. NQ's moving, catch some nice moves here on the stream. Well, at least I'm glad I secured nice profits on my a forest reward on my London session account. It was nice catching the all-time high. Unfortunately, afterwards on the New York session account, I decided to split them up. Yeah, not so nice after all. So let's say we close above this bearish value gap. Yeah, I don't like to place my stop at equal low sell side. 1-to-1 risk to reward would be right up here. Yes, 5-minute entry style better because slow move give good profit. Yeah, I agree. But, well, therefore, ES also has to move. Not like yesterday, Tuesday, and all those days. Just then it's too slow. Of course, yeah, NQ is volatile, but volatile doesn't mean it's not tradable. The thing is that I don't want to be sitting 24/7 in front of the screen and don't want to enter swing trades based on a 5-minute time frame. That's not what I'm out here to do. And ES recently really hasn't been delivering nicely. Doesn't mean it has to continue this way, but I just want to, yeah, experiment and see how it goes on NQ basically. With the increased volatility, because if I'm only looking to trade during A2, our timing window, let's say from 9:30 until 11:30, I have a much easier time to actually get a chance to hit my targets and leave the charts on NQ compared to ES, where ES, I could enter the trade now and ES might hit it like yesterday. I entered the trade long on this bullish fair value gap, and when did it hit the first target? Power hour at 3 p.m. That's fucking 4 or 5 hours here. And then eventually, during the last 5 minutes of the New York session, we hit the previous day's high. Well, of course, you don't have to be sitting here the entire time and watch that trade, but, well, then I would just prefer going to a higher time frame and look for swing trades. It's much easier for your targets to be hit within the timing window, and yeah, in, out, and done. Stream would be over if we would be trading NQ. So let's see how that works out next week. Same thing yesterday. We spoke about the SMT divergence at the low, our market structure shift paired with the breaker block, our bullish fair value gap, our volume imbalance that we filled eventually right here at 940. I would have taken the same entry on NQ that I took on ES right after the 8:30 news candle. Stop loss, even if I would have placed it at the swing low. 2-to-1 risk to reward till London buy side. Hit right at 10 a.m. While here I'm sitting and waiting for something to happen. Goes up. And then eventually, 5 hours later, it hits my target. Wow, that's not what I'm out here to do. And I see how it works out. All right, let's see if there are any last minute questions. I'm gonna end the week here. And yeah, call it a week. Having caught the move to the all-time high. I think eventually we're gonna get that retracement here on NQ as well, so might not be the best idea to enter long right now on ES. To enter at all on ES, you might still be in the short. Hope it works out, depending on where you place your stop loss. I looked for a scalp. This is not a setup that I looked forward to trade. That's why I'm out of the trade. At risk 1%, I got out with 750, so I lost 25% less than anticipated. If I do that a couple of times, 4 times, saving myself 25% on setups that are doomed to hit my stop loss, well, I saved myself an extra loss. Take profit trader. Trades have trailing drawdown for the day. So yeah, only end of day. So if you're starting out at 50k and you close day 1 on 51k, then it's moving up, but only not intraday. So if you made $1,000 profit and you lost those $1,000, your trailing drawdown still sits at the same place. Only if you close above at the end of the day at 4 p.m. New York local time. All right, guys. I'm not going to place my stop loss on these equal lows. That would be silly. But I would also like to give it some room to breathe. No. Gonna call it a weekend here, guys. Take care. Enjoy your weekend. I will keep you up to date with my decision, what I'm going to trade next week. And yeah, enjoy the time off away from the charts. All right. Bye. Take care.